Has a glimmer of hope emerged from the EU summit last week? We'll ask our next guest, Peter Hug, on For Pete's Sake, coming up right now. So my next guest just loves talking about Europe. Hopefully he won't mention the soccer match. Peter, thank you so much for being with me again this week.
You're welcome, Daniela.
You're too kind. So Peter, tell us what's happening in Europe right now. We have the ECB meeting taking place this Thursday amidst the U.S. holiday this week. What impact might that have on the markets?
Well, I think what happened on Friday was on Thursday, first of all, the Germans blinked when they played Italy in soccer, and then Merkel blinked again on Friday at the EU meeting. And there's been no concrete action taken, but they've at least come to a consensus. I mean, the Europeans have trouble deciding on a menu when they meet together, but they've at least decided now that they've figured out a way to capitalize the European banks that are in trouble, and they've come to an agreement that hopefully by the end of the year they'll have a central bank of Europe that will be along the lines of what the Federal Reserve is in the United States. And I think that what that caused was some euphoria in the market that they finally had some kind of a plan, right. And the market was grossly short over the last few weeks and caught all of the shorts off guard, and you had a major rally on Friday which continued into today. I
mean, that's just huge news, Peter, especially since we've had, over a dozen of these meetings. We've never seen any real action take place before, right?
Yeah, I think, I don't think they had a choice. They had to come up with some kind of a statement. Implementing a central bank for Europe has got major, major hurdles, and there's going to be a lot of roadblocks between now and the end of the year if they were even to succeed with that type of time frame. I just think the market was short. I mean, when you see oil going up $17 right. a barrel in the last 5 trading sessions, silver's up almost 9%. This is just a market you can't be short. It was a trader's ideal paradigm last week. You had silver hit a triple bottom at 26.27, and gold couldn't break through 1550, apologize. And it was a clear signal to go long, and people that went long made some serious money over the last 2 days.
So you said there's hurdles, but is it needed? Is it the only thing left to do?
Well, I think the other thing that is going to be needed, and it's expected for this Thursday, is that the Europeans start to lower their interest rates. I think they're going to have to I hate using the word QE3, but I think right. the Europeans have to put more stimulus into their economy, which will help. Every little step will help, but this is a long process. This could take a couple of years, and that's assuming the euro survives, and that's still a question mark in my mind.
Right. So let's look at gold now. Higher this Tuesday as we're speaking on the back of a weaker U.S. dollar. Tomorrow's Independence Day, Peter. Mm-hmm. Do you expect a quiet trading week?
Well, I mean, you've got Europe open tomorrow. You've got Asia open overnight. The U.S. isn't going to open at all tomorrow. It's a thin market. I hate making a prognosis on a thin market. I think on a closing basis today, if gold closes over 1620, next target is 1640. Closes over 1640, coming into next week, I can see an assault at the $1,700 level. If 1620 fails to hold, right. They're going to be looking at 1590 to hold. So we're in a very tight range. We're in the summer. I think Europe is pretty much done with everything they're going to say, other than the potential rate decrease on Thursday. Right. I see it trading in a range with upside potential if something else were to develop, but I wouldn't be aggressive on this market.
Okay, so Friday we also have jobs figures coming out. That might have some impact on the prices, Peter. But let's look at silver now. Do the silver bears still have the near-term technical advantage?
No, I think the silver bears are in danger here. If silver can close above 28.70, I think we'll see a 29.20 test. If it gets through there, we could see a 30 test. If you're short-term in this market, being short is dangerous. The fundamentals are still negative for silver, but there's a lot of outlying factors that would suggest if you're short this market and this market picks up, there's going to be a lot of stop-loss buying. Because of their short positions, and silver has dropped considerably more than gold on a ratio basis. So gold could actually sit around $16.50, and you could see silver go up to $30 and still not be in a confirmed bull market, but it would hurt the shorts.
Okay. I'll remember you said that, Peter. Before I let you go, let's get your thoughts on the PGM markets. I never really asked you about it, but platinum and palladium, how are they doing?
They're doing a little bit better since Friday. Prior to Friday, palladium had broken through 600. It looked like it was going to test into the 550 range. I want to see more evidence that the economies of the world start to pick up. I want to see the auto sales coming out. I believe they're coming out tomorrow. If we get more than 14 million units per annum, I think that should be price positive for platinum and palladium.
All right, Peter, thank you so much. Final thoughts for investors this week?
Enjoy the 4th of July. It's a thin market. I wouldn't get in the middle of this market. If you haven't got precious metals, it just goes to show that you need a precious metals component in your portfolio. If you're a trader, take the day off and enjoy the barbecue.
Right. Happy barbecuing to you too, Peter. See you next week.
Bye-bye.
And thanks for watching this edition of For Pete's Sake. You can email both of us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.